Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, the 28th of June is known as World Insurance Day, and perhaps what could be a better occasion to talk about the insurance landscape in India. What are the key points to keep in mind before buying insurance, and how does one pick perhaps the most suitable policy, keeping in mind our own personal finances, our other personal obligations that we need to contend with? To talk about this and more, we have with us on the show this week Priya Deshmukh of ICICI Lombard and Ashish Vohra, who is from Reliance Nippon Life Insurance. Ladies and gentlemen, thank you very much for joining in and taking out the time. So we thought it's a good time to bring you people on board. Priya, of course, looks at the health insurance space, and Mr. Vohra looks at the entire gamut when it comes to life insurance, to really talk about where we are, the steps we've taken, and what the customer, the policy buyer, can look forward to from the industry. So welcome to the show. I'll open the floor with Priya. Priya, your first thoughts seeing the evolution over the last few years?
So thanks, Surabhi, and it's a great pleasure. So over the last couple of years, things have really changed. And, at the backdrop of COVID, we've seen people being very aware. Things are changing in the landscape of health and healthcare, so to say. But even after that, even after being propelled by COVID and the patterns of, health conditions, we haven't seen much, penetration. The penetration still is in the range of around 3.5% to 4%, as against a global benchmark of around 7% to 8%. And thereby there's a large, insurance protection gap, so to say, and people still continue to pay out of pocket for their healthcare spends. So huge amount of opportunity, huge amount of innovation happening in the industry, and loads of option and personalization avenues for the customers. That's what I would say, Surabhi.
Oh, absolutely. And I think the learning curve has been pretty steep, especially after the pandemic. And I think everyone realizes the need to have sound health insurance policy. That point is completely taken. Let me ask Mr. Vohra as well, who's, of course, the CEO at Reliance Nippon Life. Mr. Vohra, what would you say? Because when we talk life insurance, then the conversation is always a little more complex. Then we always get into the debate of whether you should only look at life insurance from a protection perspective, or should you look at meeting other objectives, investments, retirement planning, etc., through an insurance policy. What would your opening thoughts be?
Right, thank you for asking, Surabhi, and let me sort of give a straight answer to what should be looked at in the life insurance space. And I often hear this comment, it is complicated. There are many kinds of products. It makes a long time to understand and all. But let me sort of simply say that life insurance for over 100 years has served the same two big needs, called addressing the risk of dying too soon and the risk of living too long. So at a fundamental level, these are the two basic needs, or the two risks, that life insurance protects the consumers from. Of course, there are several product forms and variations and terms and retirement and all of that, and we can talk a little more about that. But to your earlier question on penetration, the country sits at about a 2.8 to a 3% kind of a penetration, and you could say that we are equal to the world. The world is roughly at 2.9%, but then the question is, we as Indians, we as forward-looking countries, who should we compare with? And you look at South Africa, it sits at over 9%. You even look at Malaysia or Thailand, they sit at over 3.5%, 4% kind of numbers. So I would argue there is a reasonable headroom for us to grow. The good part, again, while awareness numbers, you're displaying, they are what they are. However, 17% of total financial savings of households now sits in life insurance. The total AUM, or the corpus of the whole life insurance industry, is over 60 lakh crores. So it's quite substantial. What will drive growth? I do think there is a fair amount of regulatory push and simplification of products and empowerment to life insurance companies to make, use, file, modify products quickly. I also personally think it is the tier 3 and 4 where the opportunity lies at a significant level. My own belief, and our company is really driving more towards the tier 3, 4, where penetration levels are lower, an opportunity of a significantly higher order.
Okay, points so well taken. But let me pick up on the life insurance piece in a little more detail first. And here, Mr. Vohra, like you said, while the penetration levels, at least at a world average, it seems okay, we're not too far behind. The question always is that you may have insurance, you may have a policy, but do you have enough insurance? Does it really protect you or not? And that's where, historically speaking, I mean, we are not a country that's been used to buying a pure term product, not getting anything back, and just paying every year to ensure that if that unfortunate event happens, our interests are taken care of. So where are we on the learning curve in terms of pure protection in ensuring that we have not only an insurance policy, but we have the right policy with the right coverage?
Now, there isn't a singular answer to that. And like we began talking, there is a variety of risks that the life insurance covers. And there is a variety of ways in thinking about it. And let me just give you one frame of thinking. What we see customers is that when they are younger, and let us just take the first 10 years of working, the savings are of a little lesser order. Protection requirement or need or understanding is of a particular order, especially urban India. They tend to begin by buying a term product, especially in the last 3-4 years. On the next 10 years of working, you have a higher corpus. You become aware of need to accumulate. You also have a family, and you need to sort of, you think of growing your savings in a particular manner. You want to expand your basket. You have other financial instruments, and you look at life insurance products to do other things for you, accumulate for you. And then comes this distinction called what is your risk appetite. And more often than not, people like to bundle term along with a ULIP if they are market savvy customers, or they tend to go in for guarantees. And then comes the last 10 years of working, maybe where retirement becomes important. So sometimes people bundle it with term. At other times, they don't. They buy a deferred annuity or a pension kind of a product, which honestly is one of the great ways of living a risk-free retired life, of having a lifelong annuity coming to you out of a deferred annuity kind of a product. So we meet all these three life stages, and we meet customers with different risk appetites. I don't think there is a singular answer to say what is right or what is wrong. As long as customers are taking financially sound decisions in dialogue with the right advisor or the right institution, I think they will take the right call.
And just for our understanding, among a lot of the various product categories that you described from an industry perspective, which is the one that has been growing the fastest, say in the last 1-2 years, and which is the one where you see maximum growth in the near future as well?
Again, if you look at urban versus you look at the tier 3, tier 4, the answer is a little different, and depends on what kind of target market you are serving. But the top two dominant categories would be the traditional and the ULIP side. So it's more the savings business or the investment business. These words are used interchangeably. The term is a relatively smaller part of it. So like you began to say, Indian consumer appears to predominantly save or invest, and along with that prefers to buy a term cover that comes along. Of course, when you look at the consumer between 20, 25 or 22 to 30 urban, the trends tend to be a little different. I would argue that in the next 10 years, term would be a higher proportion. But yeah, at the moment, pure term is maybe 5% of the total industry, and 95% is bundled in some form or the other.
In terms of some of the other savings products. Got that point. So that just kind of lays out the scheme of things as of now, the landscape, so to speak. Let's also talk about health insurance, because there's a lot of product innovation going on. I mean, we're really almost spoiled for choice. Over the years, we've seen health insurers offer plans with covers as high as 1 crore. There are plans for almost everything, for OPD services, for even maternity, typically things that were not covered earlier by health insurers. So Priya, shed some more light on this in terms of, because again, there's so much choice in the market. What are some of the kind of products that investors, or rather customers, must definitely keep in mind, given the fast changing landscape within health insurance?
Sure, Surabhi. And basically, over the last couple of years, there's been a lot of regulatory, support, and a lot of innovation that has come through. And with that, huge amount of personalization, huge amount of innovation has happened in the product creation and product delivery side of it from a health insurance perspective. Talking about health insurance, really, it's a living benefit. Through your life cycle, you go through various stages of your life, and your health insurance product needs to really walk along the side as you, kind of move through the continuum of your life stages. And with so much of innovation, so much of personalized products being, created over the last couple of years, there's immense amount of options that are available. And lately, we've also seen, modular chassis products being built, where you have a core product offering that caters to the need of basic core health insurance requirements. But over and above that, other add-ons can be added, other riders can be added, which could really suffice the need of somebody who's going family way, somebody who's really living with a condition, and somebody who may have certain other, requirements. So I guess immense amount of flexibility has been built in. The power is in the hands of the insurance companies to create this innovation. And with that, the whole gamut is open for the consumers to make choice, that really fits in these myriads of options that are available. Now,
So, okay, Priya,
say,
Priya, simplify it, because I know, we want to keep it very simple, not from the product head perspective, but you tell us, personally speaking, which are the 2 or 3 very interesting new products in the market, which you personally, for friends, for family, would say, please look at it, isko dekho, beyond just covering your hospitalization expenses?
Sure, Surabhi. So that's the point I was coming to. Basically, a consumer would need, for example, if I'm a customer as well, right? If you're buying an insurance, it needs to be very, very simple to understand, very transparent, very clear on what it covers and what it doesn't, and what is the cost at which I'm buying it, and what's the kind of value for money. So I would say, if as a customer, I would look at what is the kind of base sum insured, what is the value of that base sum insured compared to the healthcare spend. So if you look at a hospitalization expense for critical illnesses like a heart, cardiac bypass, or maybe a stent surgery or a liver transplant, and even smaller appendix surgery. Typically, these surgeries would cost much lesser in the last 5 years ago. Now the cost has increased around 15 to 20%. 15% is annualized inflation rate. So the cost of treatment has gone up. So having a cover that covers your basic expenses for basic day-to-day, kind of ailments like fracture, fever, any kind of appendix, any kind of other conditions which are, cannot be planned for. Second of all, critical illnesses, major organ, challenges. So buy a sum insured that is relevant and remains relevant over the next 5 to 10 years. That's what I would say. And I would look for myself. If I'm a value conscious customer, trying and buying not too many add-ons, but the core, product offering would be my lookout. But if at all, I'm a very fitness kind of a aware customer, wants to really have, gymming, yoga, other fitness kind of activities, and those activities coming back to me as rewards, because at the end of the day, my insurance, if I can use to do activities and remain healthy, and gives me back some rewards that can be availed in terms of redemption, either in the way of getting discounts on my renewal premium, or helps me redeem in various wellness services, that would really excite me. So those are newer options that are coming up. There are multiple products in market, but as I said, modularity and giving the power in the hands of the customer rather than having a very, very cookie cutter, fixed model that this is your health insurance, this is what it covers, it doesn't cover, and this is the price for it. I guess that has changed in the last couple of years, and there are multiple products. We can talk about my company, couple of other players are also offering such products. I would say that's the change we have seen with the innovation coming in, Surabhi. And as you rightly said, simplification, transparency, knowing what you're buying, making sure that you buy not only for 1 year, but that product remains, viable or is, sufficient over the next couple of years is what we have seen as a trend that is upcoming.
So absolutely, health insurance is going through, major changes, and there's all kinds of products in the market. You just have to go and look carefully. ask your advisor, or if you're on a digital platform, just look carefully and you'll find a solution for your needs. Let me ask, Mr. Vohra also about this. Even on the term side, Mr. Vohra, where the penetrations are low, but you expect this to pick up. Correct me if I'm wrong, I think now insurers are looking at more flexible products, some which are even willing to offer the premium back or return of premium, so to speak, if you survive the policy term. So what is a further innovation we can expect in very plain vanilla term insurance?
Yes, I'm trying to use my words carefully so that it is definitely fitting the simplicity bucket. So the term return of premium, or ROP as we call it in the industry, is not really a new product. It's been around for a while. My company has had it for nearly 5 years. So again, it is serving the sentiment of the customer who says, "Paisa de diya, वापस कुछ नहीं मिला." And this is a strong sentiment in a part of the country that what happens if I don't get a claim, or if I don't have anything to get back from the company? It looks like a wasted expense. So the term ROP came in to answer that question. But term has other variations also. It is not just ROP. There is a variant called, I want a cover for 20 years or 30 years, but I wish to pay only for 5 years, or I wish to pay only for 7 years. So you can play with we call it a premium paying term. Can be varied. You pay a higher amount for a fewer number of years, and we cover you for a longer period. There are other variants in the market called the benefits in case of a death claim are not paid immediately. It is paid in a pre-programmed manner to the survivor or to the family over a 4-year period or a 5-year period, so that it looks like an income kind of a design. So there are various kinds of options that are available, and you should expect the term market to continue to move in that direction. It is actually quite a simple to understand product. There are other products which I would argue are complicated. But this one is a simple to understand product. You can buy it with some riders, with critical illness riders, or without riders. Those are all choices. They are modular in that nature. And again, with a good advisor or a good call, some expert on call, you should be able to make these choices fairly simply. And in this business, what you see is what you get. What becomes most important is to look at the insurer's history in terms of claim payment rates and things like those. Bulk of the industry is now 98, 99%. My company is also at 99%. So those become important considerations to say, who am I buying from?
Absolutely.
With that, I think term is rather simple to understand. I'll give you a different answer on the more complicated products, though.
Now, I know, and simple is always beautiful when it comes to financial products. And typically, the simpler products, cleaner, transparent products tend to, do really well.
They're all medically underwritten products, by the way. One thing that comes in the way when it comes to term is now bulk of the market is offering medically underwritten products. So you do have to go through a medical exam, unlike the health side, which is where the underwriting is on the rear end. These were a front end. And there are some designs in the market where term is now being bundled along with ULIPs. We have a design which is called a WIN. Now that helps us give up to a 50 lakh kind of a cover to the customer without really pricking him. Now that kind of a design is not term. It is basically a ULIP chassis, and you've added on a term product to it. But it is quite acceptable to customers. You answer the problem called, what am I getting back? The ULIP is a very well-performing, kind of a product. And on that, you load a high amount of term.
A higher sum assured as well, to take care of your protection needs. Yeah, absolutely. Take your point.
Take care of your protection.
Yeah, and that's been the critique. I mean, since I have a lot of independent advisors also coming on the show, the one critique always has been nothing against ULIPs or savings products, but are they actually addressing first your fundamental need for covering your family and your sort of loved ones when the time comes? And I think some of the innovation that you described answers some of those queries. We need to take a very quick break, but when we come back, a final quick checklist from both our experts. What to do to ensure that we are buying the right insurance and that our claims get honored. What should we be aware of from the customer side? Back in a moment with that.
Let's talk money.
Welcome back. You're with us on Let's Talk Money. And as the world marks World Insurance Day this weekend, we have two experts with us to help us understand the innovation that the industry is going through and what we need to do to ensure that we are buying insurance correctly and ensuring that we get those claims when we need them. So, that's really bringing us to the close of the conversation. Priya, let me come to you very quickly. Your health insurance checklist for all the customers out there.
So, Surabhi, basically, buying a health insurance sum insured, which keeps my needs not only immediately but over the next few years in view. Looking at what kind of exclusions, inclusions, what is the network that is covered, any kind of limits, sublimits that are existing in the policies. That's what I would like our viewers to really check. Talking about wellness features, any kind of other features that could really play a role, in additional add-ons and riders that may come, as a package that we can build in. Buy early, buy comprehensive, coverage. Buy at a time. We have long-term tenure products, 3 years, 5 years. Getting the products upfront and early could really be very, very beneficial for the customers. Disclose the health condition, any minor or major or any kind of condition that is existing. Disclosing that really makes it very easy because makes it very transparent for the insurance as well as the customer, so to say. And making sure that there is value for money. There's not really the cheapest, the best, but looking at value for money and the long-term perspective. Look at the history of the insurance company in terms of claims, history, claims payouts,
Sure.
any kind of customer stories, reviews. Those
Right.
kind of things is what I would like to mention, and the ease of
Yeah.
claiming as well.
Okay, all right, got that point. Let me come to Mr. Vohra now. Mr. Vohra, again, I know that this is not a sort of a one simple answer because it depends on whether you're buying for protection or for ULIP or savings, or depending on the product. But generally, what are the thumb rules that you'll want to put on the table?
Could be a customer on an average will take a life insurance policy decision 7 times in his lifetime. So in his policy buying tenure of 30, 35 years, roughly every 5 years, he will buy a life insurance policy, often on a life stage, a marriage, the birth of a child, a house, and things like those. The customer should be very clear about what is the purpose of the policy he's buying. Because remember, he's not really going to be able to change it very efficiently, unlike several other general insurance categories where next year you could take a different call or a different decision. This is a very important decision because he is going to stick with that decision for a long time. My largest selling category is a 40-year plan. So he has to stick with the decision that he's taken. So if he's clear about pure protection need, then there are the choices that we discussed. If he's clear that he really does not appreciate the expense without a return, then it is a bundled offering that he must buy. Then the checklist says, where do I want to save? How much do I want to save? And what is my time horizon? Really, that is how the checklist really looks like. Sometimes the checklist needs to include what is the liquidity that is available on the product if I need money along the way. Therefore, those 4 or 5 considerations coupled with the risk appetite, am I the kind of person who is comfortable with the equity market? And if you really take the last 5 years, the equity market has given fantastic returns. Or I'm not, I'm really the guarantee kind of a person. And I believe that I'm taking an investment decision for the next 40 years. I think interest rates in the market are going to be going down. So I'd rather buy myself peace by investing my money in a fully guaranteed product that assures me returns and life cover. So if these clarities exist and there is a good financial advisor to discuss with, because they're a little complicated calculations, I think the right decision can be taken.
Okay, all right. So know what you want and know whom to discuss these products with. And then take an informed call. I think that's the takeaway, and we've completely noted that. Thank you very much, both of you, for joining in and shining a light on insurance, some of the critical needs that we have, whether it's life or health. Hopefully, it'll help our viewers make more informed choices as well. Thank you for joining in. Well, with that, we're out of time on this edition of Let's Talk Money. Keep sending us your feedback, comments, and queries. We'll see you again next week.
Let's Talk Money